the time has arrived where Greg should become the chief executive officer of Berkshire, and I would still hang around and could conceivably be useful in a few cases, but the final word would be what Greg said.
Warren Buffett is stepping down as CEO of Berkshire Hathaway at the end of this year. That was the biggest news during the recent shareholders meeting. But during the 6-hour-long coverage of this event by CNBC, we could learn a lot more. Not only about investing in general, but about the current situation of Berkshire, its future, and about its soon-to-be CEO, Greg Abel. So, in this video, I will distill the entire meeting and all the questions to just a few most important takeaways. And we will start with one of the most talked about subjects concerning Berkshire, its massive pile of cash.
The amount of cash we have is, we would spend, well, we came pretty close to spending $10 billion not that long ago, for example. But we'd spend $100 billion. I mean, and those decisions are not tough to make. When something is offered that makes sense to us and that we understand and offers good value and where we don't worry about losing. And the one problem with the investment business is that things don't come along in an orderly fashion, and they never will. And so we're running a business which is very, very, very opportunistic. And Charlie always thought I did too many things. He thought if we did about 5 things in our lifetime, we'd end up doing better than if we did 50, and that we never concentrated enough. So that we would rather have, if we've got $335 billion now in treasuries, we would rather have conditions that are developed where we would have like $50 billion or something like that. But that just isn't the way the business works. And we have made a lot of money by not wanting to be fully invested at all times. And we don't think it's improper, actually, for people who are passive investors just to make a few simple investments and sit for their life. But we've made the decision to be in the business, so we think we can do a little better than that by behaving in a very irregular manner. But if you told me that I had to invest, let's say that we have roughly $40 billion a year coming in, and we start with 335. If you told me I had to invest $50 billion every year till we got down to $50 billion, that would be the dumbest thing in the world to invest in that manner. Things get extraordinarily attractive very occasionally. The long-term trend is up. Nobody knows. And I certainly don't know. Greg doesn't know. Ajit doesn't know. Nobody knows what the market is going to do tomorrow, next week, next month. And nobody knows what business is going to do tomorrow, next week, or next month. But they spend all their time talking about it because it's easy to talk about. And but it has no value. I've never found anybody I wanted to listen to on the subject. And on the other hand, I've found that leafing through things like that big Japanese book that I can't read anymore, that's a treasure hunt. And every now and then you find something, and occasionally, very occasionally, but it'll happen again, that I don't know when. It could be next week. It could be 5 years off, but it won't be 50 years off. We will be bombarded with offerings that we'll be glad we have the cash for. And it'd be a lot more fun if it would happen tomorrow, but it's very unlikely to happen tomorrow. Very, very unlikely to happen tomorrow. But it's not unlikely to happen in 5 years. And then the probabilities get higher as you go along. It's kind of like death. I mean, if you're 10 years old, the chances that you're going to die the next day are low. If you get to be 115 or something like that, it's almost a cinch.
So Buffett is keeping this pile of cash for two reasons. One, he can't find big, fairly valued companies to invest in. And two, he wants to have this cash ready when the market crashes. He said it a year ago at the annual meeting, and he's repeating the same thing now. He doesn't know when, but he knows that the crash will happen and Berkshire will be in an incredible position to take advantage of the massive price drop. But we just had a visible tariff-related price drops on the world markets. So what is Warren Buffett's view on these market changes?
What has happened in the last 30, 45 days, 100 days, whatever you want to pick up, whatever this period has been, is really nothing. There's been 3 times since we acquired Berkshire that Berkshire has gone down 50% in a fairly short period of time. 3 different times. Nothing was fundamentally wrong with the company at any time, but this is not a huge move. I mean, when the day I was born, the Dow Jones was at 240, and that was August 30th, 1930, and between that and the low, it went from 240 to 41. I mean, that's so. If people think that it made a really major change, it didn't. If it had gone up 15% instead of down 15%, people think they take that with remarkable grace. but if it makes a difference to you whether your stocks are down 15% or not, you need to get a somewhat different investment philosophy, because the world is not going to adapt to you. You're going to have to adapt to the world, and you will see a period certainly in the next 20 years, you'll see a period that will be in what somebody in the market described one time as a hair curler compared to anything you've seen before. I mean, it just happens periodically. The world makes big mistakes, and surprises happen in dramatic ways. And the more sophisticated the system gets, the more the surprises can be out of right field. That's part of the stock market, and that's what makes it a good place to focus your efforts if you've got the proper temperament for it, and a terrible place to get involved if you get frightened by markets that decline and get excited when stock markets go up. I don't mean to sound particularly critical. I mean, I know people have emotions, but you got to check them at the door when you invest.
So the recent price drops are way too small to interest Buffett in deploying some of his cash. But he did use this question to remind us about the fundamental rules of investing in the stock market. But last year, the news were not only pointing to the biggest pile of cash in the history of this company, but also to a very meaningful investment in 5 Japanese holding companies. If you want to learn more about them, I made a video around a year ago about this investment, so you can find it here. And this year, we learned a bit more about what Buffett and Greg Abel think about these companies and what are their plans for the future.
I was just going through a little handbook that probably had 2,000 or 3,000 Japanese companies in it. One problem I have is that I can't read that handbook anymore. The print's too small. But and here were these 5 trading companies. They have a special name for them in Japan, but they were selling at ridiculously low prices. And so I spent about a year acquiring them, and then we got to know the people better, and everything that Greg and I saw we liked better as we went along. So we got fairly close to the 10% limit that we told the company we would never exceed without their permission. And so we did ask them recently whether that limit could be relaxed, and it's in the process of being relaxed somewhat. But we have been treated extremely well by the 5 companies. They talk with Greg primarily. I went over there a year or 2 ago. Greg's more cosmopolitan than I am, so he's which isn't saying much actually. But
very little.
But he is. I don't know. How many times do you think you've met with representatives of one company to the other?
Yeah, when you think of the 5, there's definitely a couple meetings a year, Warren. And I think the thing we're building with the five companies is, one, it's been a very good investment, but we are really, as Warren touched on, we envision holding the investment for 50 years or forever. But I think we also are building relationships to do incremental things with each of those companies. And we really do hope to do big things with them globally. They bring different perspectives and different opportunities than we see, and that's why we're building that long-term relationship with them.
We don't have any intention in any way of trying to change what they've done because they do it very successfully. And our main activity is just to cheer and clap, and that I can still do at 94. So we will own those. We will not be selling any stock. I mean, that will not happen in decades, if then. And my guess is that they will find things, because they cover the world pretty much, the 5 trading companies. We will find things occasionally that may be very large for any individual company there. They may in some way be assisted by some help we bring to the situation. But that will be an expanding relationship. It's too bad that Berkshire has gotten as big as it is, because we love that position, and I'd like it to be a lot larger than it is. But even with the 5 companies they're very large companies, and they're large companies in Japan. And we've got at market, in the range of $20 billion invested, but I'd rather have $100 billion than $20 billion, and that's the way I feel about it.
I think it is very important to notice that Berkshire is in talks with those 5 companies to actually buy more than 10% of each of them. Buffett even went so far as to say that he currently invested $20 billion, but he would like this investment to be 5 times bigger. So this is definitely going to be a meaningful and long-term investment for the company that can potentially open doors to new opportunities along the way. Okay, so we learned about the cash pile and the Japanese investment. There were also some questions related to Geico, the insurance company owned by Berkshire, but nothing exceptional here. But what caught my attention was the fact that Buffett decided to talk about the USA electrical grid and all the possibilities Berkshire is exploring in this sector.
You know, it's very obvious that the country, for example, needs an incredible improvement, rethinking, redirection even to some extent in the grid. I mean, we've outgrown what would be the model that America should have. And in a sense, it's a problem, something akin to the interstate highway system where you needed the power of the government really to get things done, because it doesn't work so well when you get 48 or 50 jurisdictions that each has their own way of thinking about things. There are certain really major investment situations where we have capital like nobody else has in the private system. We have particular know-how in the whole generation and transmission arena. The country's going to need it, but we have to figure out a way that makes sense from the standpoint of the government, from the standpoint of the public, and from the standpoint of Berkshire. And we haven't figured that out yet. I don't know whether Greg wants to even explain a few of the major problems, but that is a clear and present use of hundreds of billions of dollars. I don't think we've made any progress particularly, though. Tell us more about that, Greg.
Yeah, and I think these are very unique in that, not unique in that it's sort of reflective of where we're at. There will be very significant investment opportunities across a variety of industries, as Warren touched on in the electric industry or the energy space. We obviously know that well with our existing business, and the capital required to meet the long-term needs of what's currently projected as demand is enormous, and we as Berkshire will be in a good position to help address those needs. But the model around it and the risks that need to be addressed to deploy that type of capital will be different than they are today.
So it seems that at least a part of the cash can be spent on energy projects. And because they called it very significant investment opportunities and pointed out that only Berkshire has sufficient cash to take on some of those projects, it really got me thinking. On one hand, it may be related to securing energy transit between states, but it may also have something to do with Warren Buffett's good friend, Bill Gates, and his ideas of creating a lot of small nuclear power plants. Now, I know that that is only my speculation, but one thing is certain. If these projects come to life, they are going to be huge. But that is all in the future, and the future is going to be tied with Greg Abel. So let's learn a bit about how he sees the future of Berkshire and his role in it.
We start from a great place where we've got a great culture within the business. We have values that we as a management team and really as defined by Warren and those Charlie and everybody associated with the business. We've got great values that really set Berkshire up well for the future. And obviously, as we deploy capital and allocate capital, it's critical to Berkshire as we go forward. And equally, it's around managing risk. But when I think of our values, there are a couple that are absolutely critical. One, will maintain the reputation of Berkshire and that of our company. And I view that in investing or how we operate things across each of our businesses. That will always be a priority and something that will ensure is in the forefront of our minds. I think equally as we then look at our back to Warren's balance sheet comment, we will have a fortress of a balance sheet. And we want to, I thought Sue Decker, our lead director, said it well yesterday, we've got a significant set of cash right now, but it's an enormous asset to have that. And that will continue to be a philosophy. Yes, when we can deploy it, we'll deploy it well, and I'll come to that. But equally, we do recognize it as a strategic asset. And it allows us to weather the difficult times and at the same and not be dependent on anybody. So again, that will be an investment philosophy. We will remain Berkshire, and we will never be dependent on a bank or some other party for Berkshire to be successful. Thank you. I would then move to touch on allocation of capital be absolutely critical, but with that comes management of risk and understanding risk. And that falls upon all our managers, insurance, non-insurance, but we'll bring that across Berkshire. And then the other value I would touch on, but that really relates to where I'm going, is ultimately we have a great set of operating companies that do produce significant cash flows, be it in the insurance companies creating float or our various non-insurance companies producing significant cash flows on an annual basis. We intend to continue to ensure that's a strength of Berkshire as we go forward. And it's absolutely critical to our long-term success. Now, with those cash flows and with the float, and then equally as touched on, we have significant resources already in our balance sheet. We'll really continue to move forward with a very similar philosophy, or it's an identical philosophy to what we've had currently and for the past 60 years. We'll start by looking at those opportunities within our business, and by that I mean within our insurance, non-insurance businesses. Are they properly capitalized and have the opportunity to manage their business? And that will continue to exist. They'll operate in an autonomous way, but in the end, Berkshire still manages the capital that will go into those businesses, or what potentially will come out of those businesses. Equally, the next opportunity is to acquire businesses in their totality, or 100%. And there are great times when we can do that. Warren touched on, we had one that was interesting in the last quarter, the $10 billion acquisition. But again, the value relative to the risk have to be right. And if it's right, we want to own it. If it's not the time, there'll be another time to own assets like that. And then there's the opportunity to own pieces of companies through the equity. But as Warren's always highlighted, and again, this will be our approach to how we think around those companies, though we own a piece of a company. We own a piece of that cash flow. We own a piece of their balance sheet. It's not just a share certificate. And as we approach that, and really we'll approach it with the thought that we're going to own this company for the long term. It's, again, understanding what, be it the 100% company or the 1% company, do we thoroughly understand and thoroughly do we have a strong view of what those economic prospects of those companies will look like? And Warren said it earlier, 5 years from now, 10 years from now, 20 years from now. If we don't have a view of that, we won't be investing. be it 100% or 2% of a company through equities. We have to thoroughly understand what those prospects look like, and associated with understanding those prospects, we need to understand the underlying risk of the businesses. And it's really the investment philosophy and how Warren and the team have allocated capital for the past 60 years. Really, it will not change, and it's the approach we'll take as we go forward.
So we can probably see why Warren chose Greg as his successor. He understands Berkshire, and he wants to build on top of all the successes and continue to develop the same playbook that worked for the past 60 years. But he was also asked about his management style, and here we can see a slight difference in approach.
Warren bought the businesses, had that general knowledge. I absolutely had to engage with each of them, and they've been great in sharing their business models, their approach, their thoughts around where the risks and opportunities are. And I think as we went through that, there's no question I had questions and wanted to engage with them. And Warren talks about the curiosity being important as you go through things. That would be my style, to have questions and comments around their business, their frameworks. At the same time, they have great businesses and they run them very autonomously, and that remains in place. But if there's opportunities to see where maybe you've seen something in another business or an opportunity I may see in their industry, we're going to discuss it and see if that's something we should pursue, or are we properly addressing the risk. And I found all our managers to be absolutely engaging on that and want to have those dialogues. And I'd say that's a reflection of my approach. I'd also say that when you think of our managers, again, very autonomous. They run their businesses. They know it better than I ever will. But if I see an opportunity that it's well worth their time to talk to another one of our managers, if it's Geico and they've gone through a technology transformation, they're not by themselves that need to be thinking that way. We want to make sure the right folks are talking and figuring out how we can benefit from the prior experiences. So it's, I would say, more active, but hopefully in a very positive way. And we got an exceptional group, so it's worked out exceptionally well as I've gone through that period of time.
It's working way better with Greg than with me because, I just I didn't want to work as hard as he works, and I could get away with it because we've got a basically good business, very good business, and I wasn't in danger of you firing me by virtue of ownership and the fact that we would do pretty well. But the fact that you can do pretty well doesn't mean you couldn't do better, and Greg can do better at many things. Many people want to be managed, need help in being managed. Some don't. Some you just leave alone. We've had managers that would have been crazy to start giving instructions to because they just quit. And I wouldn't blame them because I'd be the same type myself. But a lot of people, people really do welcome direction and help, and particularly when they're getting it from somebody like Greg that really lives the life himself and doesn't just come down from high and say, here's what you do while I do something else.
So it seems that Greg will be a bit more hands-on, but maybe such an approach will allow all the parts of Berkshire to work together even better. Only time will tell. So these were the main takeaways from the 2025 Berkshire Hathaway annual shareholders meeting. But there is one more thing. This was the last meeting with Buffett as a CEO. And I believe that his announcement and the reaction of all the shareholders was a historical moment, not only for the company, but for the entire investment community. So let's see it.
Tomorrow we're having a board meeting of Berkshire, and we have 11 directors. 2 of the directors, who are my children, Howie and Susie, know of what I'm going to talk about there. The rest of them, this will come as news to. But I think it's the time has arrived where Greg should become the chief executive officer of the company at year end, and I want to spring that on the directors effectively and give that as my recommendation. Let them have the time to think about what questions or what structures or anything they want, and then as the meeting following that, which will come in a few months, we'll take action on whatever the view is of the 11 directors. I think they'll be unanimously in favor of it. And that would mean that at year end, Greg would be the chief executive officer of Berkshire, and I would still hang around and could conceivably be useful in a few cases, but the final word would be what Greg said in operations, in capital deployment, whatever it might be. I have no intention, zero, of selling 1 share of Berkshire Hathaway. It'll get given away gradually. It just won't. I would add this. The decision to keep every share is an economic decision, because I think the prospects of Berkshire will be better under Greg's management than mine. But I will come in and there may come a time when we get a chance to invest a lot of money, and if that time comes, I think it may be helpful with the board, the fact that they know I've got all my money in the company, and that I think it's smart, and I've seen what Greg has done. So that's the news hook for the day, fellow. And thanks for coming. The enthusiasm shown by that response can be interpreted in 2 ways, but I'll take it as a problem. Thank you.
Sir.
Yep.